Abhishek Basumallick also joining us now. Abhishek, you must be listening to my colleague breaking the story. Ching's Secret, I mean, it's such an amazing brand. We all have tasted it at some time or the other, either the sauces or the noodles. If it actually goes Tata consumers' way, do you think it will really be an important addition? Because this category clearly is, showing a lot of promise here in India, no?
So, first of all, good afternoon to you and all your viewers. I think, whether Ching's Secret, the deal materializes or not, if you look at what is happening with the Tata Group after Chandra has taken over, is that there is very specific focus on some of these, large businesses that they have, and consumer is one of them. And there's a continuous process of coming out with new products, expanding the market, distribution, etc. So Ching's Secret would actually be a good addition. I mean, the products are excellent. I am one of those who love the sauces at least. So definitely it's going to be a boost. But even if it does not, I think it's a good business. Tata Consumer is a good business, and with the kind of focus the management has in terms of bringing out new products, it should do well in the future.
Right. Abhishek, that's right. That's an interesting observation. You know, the Chandra's leadership, the specific focus coming back on the consumer businesses of Tata Group. But let's go beyond that. Talk about markets. Last week was a very monumental move coming in in the market. Your portfolio must have got bumped up again, I'm sure. So, are we getting spoiled now, or should we moderate our return expectations from here on? Because a lot of big bulk of gains have actually come in a short period of time already.
Right. So, I mean, for the last couple of years, while we've been speaking, I've been always unabashedly bullish on the markets. But I now think that we need to be a little bit more circumspect. When everything is going, all the news flow is going very positive, and the markets are throwing all caution to the wind. It's probably it's more important to be a little bit cautious. I am not bearish by any means, but I think we need to be a little bit more cautious. I think that the last few weeks, or at least a month, the trend that I see is people are overwhelmingly buying stocks that have not moved up in the previous rally. And that could be a danger sign, because then you are sort of ignoring the fundamentals of businesses, and you're trying to buy only based on expectation that something is not moved, hence it will move now. So that, I think, is slightly dicey. So you need to be a little bit circumspect, pare down the return expectations, and then play. So the whole idea is play the long innings. I mean, play the India story for the next decade instead of trying to get all your returns in the next 3 months.
That's correct. Abhishek, where is the margin of safety in this market? Where exactly do you see either earnings growth very strong despite of the run-up, so that the prices appear okay, or ownership so low that that itself is the downside is protected because barely anybody owns that space? Are you finding it difficult to look for margin of safety? Do you have some places in mind?
In pure valuation terms, yes, all the stocks or all businesses where you have earnings visibility, they have run up a lot. Valuations are not cheap by any means. But even within that, I think we need to focus on quality businesses. This dilemma of whether we'll have a large cap rally or a mid cap rally or a whatever cap rally, I think we need to take that out of our minds. Focus on good businesses, whether they are large cap, mid cap, small cap, irrespective of that. And it's not easy finding good businesses at reasonable valuations at this point in time, but we need to keep searching for industries where there are significant tailwinds.
Have you started looking at some pharma names? Because that end of the market is also showing good earnings growth and probably worst of the regulatory glare is over.
Yeah, I think we need to. I am definitely looking at pharma names. Some of the, I mean, there is a huge amount of demand coming in from US because a lot of drug shortage is there. India itself is a very good market. So overall, I think pharma is going to do well. We need to pick our spots within pharma because every company is slightly different. So that's a very interesting area. Otherwise, I think the other sectors that we typically, have been liking for a while is railways, industrial, cap goods, engineering, that space.
But don't you think that the valuation in cap goods and engineering has got a bit stretched right now? Would you allocate fresh purchases also in that zone, or you would want some earnings, a few quarters of earnings to pan out and then take a fresh look?
So that's a very, very difficult call to take because my guess, or rather, whatever I'm analyzing, I think the earnings growth is going to continue to surprise us on the upside. Uh, if you stretch your time horizon a bit longer, there is a very distinct possibility that manufacturing is going to become a very large theme over the next 3 to 5 years. And if that happens, then we are probably at the beginning of the rally and not at the end. So yes, there is in the next 2 3 months, 4 6 months maybe, there is a possibility of a consolidation in these names. But if you stretch your time horizon to between 2 to 3 years, some of these names could give good returns even from here.
What are the risks in this market which you are, you were saying that you are not bearish, but you have turned cautious. So what are some of the risks you are monitoring and keeping an eye out for?
See, I think India right now probably is poised in a sweet spot. FPI numbers have started, have been pretty good. But overall, if you look around in the world, there are a lot of challenges. Europe economy is not very good. Neither is the US. So there is a possibility that we can get bad news from global markets. And Indian markets is by no means completely decoupled from global markets. So, risk will probably come from something that we are not factoring in today. And a lot of things, I mean, valuations are not completely in our favor. We've had a continuous rally. If you look at the IPO, frenzy that's going on, both in the SME market as well as in the main board, things are looking like there is some amount of complacency, exuberance, whatever you may call it, in the market participants, which usually is not a very good sign. So that's the sign when you need to sort of hold your horses and start becoming cautious.
Fair point. Before I let you go, Abhishek, I just want to understand from the lender's perspective. Now it is kind of getting into the price that rates actually would start edging lower by mid of next year here in India, however shallow the rate cut cycle may be in India. So what would the impact, how do you see the impact on lenders overall, banks on the one side, NBFCs on the other side?
See, honestly, I mean, I think we've had this discussion earlier when the rates were going up. It's going to change sentimentally. The rate cuts probably is going to be 25 basis points. Not going to change anything materially, but it will probably give a boost to industries like the real estate sector. Banking, I don't think there's going to be much change.
Right. All right, Abhishek, we'll let you go on that one. Thanks so much for joining us.